You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. If you're paying $0 to trade options, you're paying too much. That's because at public.com, you can go a step further and earn rebates on every single contract traded. No commissions, no per-contract fees. That's table stakes. When you place an options trade at public.com, you not only don't pay, you earn a rebate. And those rebates can add up fast. Public is the only options trading platform where you can earn rebates. You literally won't find a better deal. So, switch to Public and start getting rebates on every single contract traded. Or stay with your current options trading platform and leave money on the table. The choice is yours. Public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean but one thing. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in the wild, the woolly vol market? Well, let's find out together, shall we? Yes, it is time once again for Volatility Views. My name, of course, Mark Longo, coming at you from the network that's been beaming to you for nigh on 18 years. At the end of this year, 18 years. Madness. Madness to say that out loud. So if you like what you hear, throw a like, a star, a comment. And, of course, listen to the full network. I know you Vol Views hardcores. You like to mainline some Vol, but by all means, hit the network. And, of course, if you want to go above and beyond, you don't want your broadcast week to end with Vol Views, and who would? You want to come back for some awesome oddities, man. If you listened to last week alone with the UVIX on options oddities, you've had a good year out there. So, check out Options Oddities. You're missing out. TheOptionsInsider.com/pro is the place to go to learn more. As we learn who's joining us on the old Vol Views episode for today, dare I say it, the penultimate Vol Views for the mad year that is 2024. First, we go out once again to the southern volatility mecca known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Vol Views for the penultimate episode, sir.
Yeah, hey, quite the day here today, huh? Quite interesting.
Yeah.
Glad to be here. Plenty to talk about today, I think.
Yeah, this is we could spend a lot of time just in the beginning of the Vol Review this week. A lot going on this week. And joining us to help break down all the madness, holding down the UVX hot seat this week, our old pal, Mr. Rich Excell, the director of the Derivatives and Trading Academy over there at the University of Illinois, aka the Hogwarts for derivatives traders. I think we have established that in his recent appearances. So I guess that makes you Dumbledore, Rich. Welcome back to the show, sir.
Yeah, yeah, that makes me Dumbledore. So I guess I die in the end.
I was going to say, spoiler alert, doesn't work out for you too well.
Yeah, I don't know how I feel about that yet.
Maybe you want to be I don't know, maybe you want to go dark side, maybe a little Snape. We'll workshop it. I don't know. You more a Slytherin guy? We'll have to see. We'll have to see how that goes, listeners, as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show we do just that. We break down the week that was, and indeed still is. And man, do we have a lot to break down out here. What a wild week. Our chat's saying, doesn't feel like Friday. It feels like Tuesday to that. I don't know. In some ways, I guess that's true. In other ways, it feels like we've done a lot of living this week. When you hear the vol numbers and volume numbers a little bit later, you'll see what I'm talking about. Of course, we all lived through it. It was a wild week. It was indeed Fed week, listeners. And you know, the last one came and went with a whimper because everyone was a little bit more focused on the event that popped off immediately before it, which was, of course, the election. So we were still kind of digesting the results of that when the Fed did their thing. No one really expected them to do anything in the middle of that maelstrom, and that was the case. But they were widely expected to do the 25 basis point cut, which is exactly what they did. In fact, I don't think I've seen the Fed watch this unanimous going into a decision in quite some time. It was north of 95% that they were going to do the 25 basis points. What I don't think a lot of people had was what came after, which was, of course, all the talk about the future, dialing back the rate cuts, the lingering specter of inflation not quite going away. That spooked a lot of people out there. We saw the markets head into a tailspin out there, really. S&P off 3+%, every other index somewhere in that ballpark as well. Vol popping. We saw VIX cash getting north of 25, up to about 27 at one point this week. It was a very odd disconnect. We'll get to that with the futures in a little bit, but it was a weird time. Of course, Gies was rolling off the board, so you had the Gies future going out at around a 15, and then you had VIX cash at north of 25. It was a weird time out there to be looking at vol. But that's what happens when you have a Fed day right around VIX go away day. All kinds of madness happens out there. And then, of course, fast forward to today, after we had a couple of days of really dallying with the red out there, trying to turn green yesterday, then turning red again towards the end of the session, but not much, ever so slightly. Today, of course, after all this talk of inflation this week, what comes out today but, of course, the PCE, which is the Fed's preferred, quote unquote, the preferred indicator of inflation, and, not so bad. So markets off to the races again today, getting back not quite everything that they gave up on Wednesday, but about half of it. We were off somewhere in the ballpark of 3%, getting back about 1.5%, actually about 1.7% right now in the S&P. Let's see, how high do we get? We didn't break 6,000. We got close to it, though, 59.81 or so, right around 59.65 right now. Puts us up about 1 2/3% in the S&P. Same percentage in the NASDAQ. Dow, which has just been taken to the woodshed for the last couple of weeks out there, just a historic run of red for the Dow, up 1 3/4%. So one of the rare days where we could say the Dow is actually leading the dance to the upside. Haven't said that for a while. And VIX cash, after kissing up 27 this week, how freaking nonsense is that? I mean, again, that's the cash, so bear it in mind. But now back to, shall we say, a more reasonable 1840, up 4.15 points since our last show. Obviously got much higher intraday than or intra-week, and coming right back down the escalator the other side. VVIX still frothy, got up to 137 this week. That's kissing lower pandemic territory again, when we were starting to get really wild out there for a while. And remember, we were north of 100 in VVIX for a long time post-pandemic. Now back to a 116, still very frothy, still very elevated, but down from the massive 137 we kissed earlier this week. That still puts us up 16 points. We were exactly at 100 a week ago, so still up 16 points from where we were this time a week ago. The market's apparently sailing past any concern of a shutdown. They're like, shutdown? What shutdown? We got a good PCE. We're good to go. So it is one of these scenarios, again, where they're looking for any good news they can get, and they'll take it, and they'll whistle past the graveyard of anything else, which is why I think this week's Fed chat was such a shocker. Getting a direct dose of bad news was kind of shocking to a market that's been riding on rate cuts and AI for the last couple of years. All right, a lot to unpack. Let's go out to the Eurex hot seat first. Again, this is a wild vol week. I'm sure everyone has a lot to say. Mr. Rich, we'll start with you, sir. A wild week. The Fed sending markets into a tailspin, and now we're roaring back to life, sir. What caught your eye from a vol perspective this week?
Yeah, I mean, in some ways, I would say a little surprised at the overreaction to the Fed news. Because, I mean, I had written about that the day, that day called hiding in plain sight because, Wall Street Journal leaked out that there was going to be a hawkish cut, even before it came out. So that shouldn't have been a surprise. I guess I'm biased because I've been in the higher for longer camp for a long time. Then that the Fed I don't think should even be cutting what they have been cutting. But because, you talk about the PCE that came out. I'm old enough to remember when Jay Powell told us that the super core inflation, right, the core ex-housing services inflation is what he really cared about. And that's still trucking along at like 4.25, 4.3%. So you're looking at that, it's still a fair bit of work to do. Now, I mean, and the labor data has definitely is not as weak as it looked a few months ago. So, in some ways, expecting them to sit back and relax for a little bit here after they've cut 1% shouldn't have been a huge surprise, especially with all the moving parts we're going to have with the new administration, and that new administration is coming. And you could tell it's the first 100 days is going to be wild and woolly with everything we've seen already just in the last month. So, looking at it, you're like, I think this might be the near term reality once we kind of get through the holiday theta collection period. Once we kind of get into January, I would think that we should expect a little bit more volatility. If we're making policy via Twitter, then that there's going to be a little bit of uncertainty. And then of course we look across the pond and there's a lot of uncertainty there. We look north of the border, there's a lot of uncertainty. So everywhere you look, there's some uncertainty. That doesn't necessarily mean negative, but it just means, to me, it seems that you're going to get a chance to gamma scalp and trade around a little bit, and that should kind of, to me, should keep us a floor once we kind of get past the holidays.
Yeah, I'm definitely with you. I was saying this on the show last week on the network, that the degree of complacency we were seeing in the broad market, the vol market, the Fed watch, it screamed shocking to me that it was a done deal. The basis points were in, and that we were just partying into the holidays, and they were just hitting every bit involved they could think of. It just was a screaming opportunity to me to put on some vol upside. So hopefully you folks did out there, listeners. Hopefully you listened to shows like Oddities and stuff last week, because it was one of those things. You know me, I don't like when people get a little too complacent ahead of these big events. Brexit comes to mind, elections recently, all sorts of fun. And, it's always pays to have a little bit in your back pocket for these days in case things go boom. And they certainly went boom this week out here. Let's turn now to the Southern volatility mecca. Mr. Meatball, same question for you, sir. A wild week on the vol front. We're up, we're down. Fed's coming, or inflation's coming, it's going to kill us all. Oh, wait, it's not that bad. Vols explode and vols coming crashing back to earth. What caught your eye, sir?
Yeah, I mean, that 27 number was kind of phony because that took place after the bell when we had some continued selling.
It was ridiculous.
But the cash market stopped and option prices went up. Really, I think VIX topped out around 23.5. We got some follow through. I mean, the movement in term structure, and I know we'll talk about it in a second, absolutely bananas. I think the part that's really fascinating is how complacent we were into the Federal Reserve announcement. Mark, I don't know if you looked at this. Do you know what the at the money straddle on Wednesday, heading into the Fed, like 5 minutes before the Federal Reserve, do you know what we were trading 60-60? So call that, 100 points ago. And if you look at where futures closed, call it, or the futures low this morning, call it 300 points lower. Do you know where and we moved 170 points just on Wednesday. Do you know what you could have bought that at the money straddle for?
Way too cheap. You talking daily? You're talking like weekly?
The daily. So you would have bought it at 12:55 Central, 1:55 Eastern, and it would have closed out at 4 o'clock. Do you know what that would have cost you? $24. $24.
Doesn't surprise me at all.
Yes.
I was saying this last week. This complacency was mind-boggling to me. I don't get it at all.
I mean, I think, markets were a little bit, and so with the 0-day vol that cheap, I think we had kind of a mini gamma bomb on Wednesday. I think we saw things kind of get overdone. That 0-day complacency really set in, and the speed with which we blew through stuff that would normally be resistance, I think was indicative of 0 DTE causing some panic. I mean, we didn't blink at 6,000, didn't blink at the 50-day moving, didn't blink at the 21-day moving average, didn't blink at 6,000, didn't blink at the 50-day moving average. Futures didn't blink at 6,000. We just went boom, 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 and I think that was just people hitting the exit button on that as we kind of pulled back, and they got kind of caught flat-footed, being short options in 0 DTE.
Well, we've been saying that for a while, right? That lack of reluctance to hit vol comes in a variety of flavors. You see it in VIX, you see it in there. Of course, you see it now in the 0-day straddles and options as well. People have been making a living for a while now. People were pulling me aside at the FIA show just a few weeks ago. People who are professionals in other areas of the business saying, man, I've been lured so much into these 0 days. It's taking me away from my day job, whatever it is, developer, exchange exec, whatever. But there's so much to be had out there. Yeah, there's a lot to be done out there, but also days like this week, it could certainly, maybe you give back more than you've been taken out of late out here. So a lot of wild stuff to unpack. I want to hear your stories, listeners, as well. Tell us your stories of this week, your trading journey, your trading saga. Did you have some upside for a rainy day? Did you keep some powder dry for the Fed? Were you all in on crushing the bid? What were you up to? They sent it in, of course, over there at Options on the major platforms. Questions at theoptionsinsider.com. If you're listening live, you can always chime in with what your saga was, your tale from this week. As we keep on rolling, let's go out to the land of the vol surface. Man, this could tell some stories this week as well. Coming into the beginning of the show here, we of course had Gies rolling off the board, which, by the way, I kind of wonder if there should be some sort of bylaw in the VIX prospectus that we don't have the options go away and the settlement on the day of the Fed. It seems like a marriage not made in any sort of heaven out there. That leads to the weirdness we saw this week with the cash showing wild numbers and all that, and people writing into us talking about VIX cash at 27 when it really wasn't there. That's why we had to address it here on the show, because I knew people were going, oh, VIX almost threatened to 30. Yeah, not really. But it's one of those wild weeks. Things are always weird when VIX is going off the board anyway in the middle of the week, but now you add the Fed into the mix and you get all sorts of wild. So yeah, December rolling off the board this week. January slotting up into that pole position. Spoiler alert, looking a little bit frothier out there, even though we have come back off the top right now. In fact, as I'm looking right now in the term structure all the way out to August, remember, everyone's right, oh my God, 27 VIX, blah, blah, blah. Looking at the term structure right now, again, we have come back a little bit today, but still, you can't even sniff a 20 handle. The closest you get is about 1980 going all the way out to August of next year. So can't even find a 20 handle on the term structure as of right now, which is kind of interesting. Probably would surprise a lot of people who just focus on that cash number all the time. Of course, that front future is now the Jan future, and coming in the start of the show, it was right around 18 3/4. That puts it up about 2.25 points from where it was this time last week. Feb coming in the start of the show was exactly at a 19 even. That puts it up about 1 2/3 points from where it was this time last week. Let's go around the horn, the opposite of the way we started. Let's go out to the meatball first, because you said you were watching the term structure quite a bit this week. There was a lot going on out there, sir. What caught your eye on the vol surface this week?
Yeah, it was flying around. We started the week with the, I just love this. So we started the week with the January future at below 17, call it 16. It closed 1660. Our peak was Thursday when the Jan future was as high as got almost to 22. It got as high as 2180, closed 2145. Today we're back below 19, sitting at 1875. So this thing is just flailing around. With 33 days, I'm actually surprised how reactive the January future is to the way volatility is moving over the last couple of days, but it is correlating pretty strongly, and which I think is pretty fascinating.
Does that give you some pause as well when VIX is going the way of the dodo on the same day that Powell and company are speaking, sir? Do you keep a little extra powder dry for days like that?
Yes, I think it's a smart decision, and I'm killing myself for not buying that straddle. I got to be honest. I was looking at things.
I assumed, and you told me that you had a bunch in your back pocket. Oh,
I wish I did. I was sitting there being like, that is way too cheap. That is ridiculous. That is ridiculous. That is just ridiculous. And then I was like, well, the market makers have it there priced there for a reason, and so I didn't do anything. And of course, it would have been like a year maker trade.
You know how you make a move their straddle? You lift their offer, sir. You say, I'll take some of that. How are they now? You can be that guy. You can be that guy that you always dreaded as a market maker. You could be the guy saying, I know. How are they now? And make people live in fear of you. Would have been a year maker. How are they now for my 10 lot? Let's go. What you got? Yes. Good times out there. Mr. Rich, same question for you, sir. What caught your eye in the rapidly evolving volatility surface this week, sir?
Well, I'm looking at it. I mean, you can obviously see the front end kind of whipping around a little bit, but to me, I look at it and say, I'd be expecting to see a little bit more of a bump out there in kind of the March type of period. Because to me, that's when you're starting to get into a lot of catalysts that we're going to be seeing in the first quarter of the year. And so I would think, to me, if I'm looking at things, I'm going to be trying to kind of position some stuff out there. The January to me is a little tough with all the holiday stuff that's kind of going on. But that's where I think I'm surprised that people are not, that especially when you're looking at the kind of the real money, their December is going to be rolling off. Where are they going to be looking to position to kind of hedge their portfolio? That's when you're going to get the culmination. You're going to get the Fed meeting that's really in play, because January is not in play. You're going to get some more earnings. You're going to get some more U.S. political news. And so I'm surprised to see we didn't see a little bit more of a bump of people looking at that. That I had no idea that the daily straddle was 24. I mean, that is a year maker, as Mark was saying. I mean, I just wonder how much. I mean, I kind of heard was how much short upside dealers had. I wonder if they're just choking on too much time decay and they just had to reduce it. But that was definitely a big opportunity, because I mean that's just that's one where, with everything that was going on, you're right. Even if the meeting was a non-event, you might still have been able to make back some of that. So that's a bit of a surprise.
Now let's see what surprises lurk in store for us now, listeners, as we go beyond our shores to explore a little bit of international volatility.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, everybody, let's explore what's going on in the international vol, specifically touching down out there in the Eurozone. A lot of interesting developments out there in the Eurozone since even the last time we chatted. Of course, last time we chatted, we were talking about VIX and VSTOXX kind of moving within lockstep of each other. That premium was all but gone. They were pretty much flat, which was kind of interesting. Of course, we then saw some interesting developments out of Germany. First, we've seen France, their government kind of falling apart. Now Germany following suit. So kind of a 1-2 punch for the two leading economies in the Eurozone. Usually not a good thing for vol on that front. And coming into the start of the show today, we had VSTOXX closing at a 1684, up a little over 3, about 3.09 points. Now, that may not sound like a lot, but then again, a year ago this time, this was pretty much the year low for VSTOXX. We had about a 12.12 right around December 15th. So VSTOXX was being a good little boy this time a year ago and performing as it's seasonally supposed to. This year, we've got some political turmoil in Europe. We've got some domestic Fed trouble here in the U.S., all of that kind of leading to a little bit tastier, frothier stew out there in VSTOXX land right now than we would usually expect this time of year. Of course, the high came back in August of this year, 16 on August 5th. Not quite sniffing that right now, but interesting to see. We also saw post-Fed this week after, VSTOXX is obviously a measure of international vol, but they are not immune to vol shocks like we saw with the Fed. So post-Fed, they got completely inverted. Both got jacked up. Then, of course, VIX is a more domestic vol measure, so it probably should take the lead in that environment. That's exactly what happened. It got up to about a little over about 1.5 point premium to VSTOXX during that period. Of course, now we've seen everything get crushed coming into the open. So VSTOXX actually coming in a little more. Again, 1684 out there in VSTOXX to close today. Whereas, as we've been talking, VIX has firmed up a bit, back up to a 19 even right now in the VIX cash. So now looking at quite the premium, about almost 2.25 points worth of premium VIX over VSTOXX right now. Led to a lot of, as you might expect this week, a lot of upside call buying in VSTOXX, not just front month. We've been talking a lot of Gies and kind of near dated stuff, that 1x2 put spread that Russell's been talking about for a while. We saw farther out the curve this time, upside call buying, I should say, in VSTOXX. Obviously, people thinking this might lead to a little bit more tumult down the road, which makes sense. Germany's elections are on February 23rd. So obviously a huge question mark. If you're looking at European vol, February 23rd is marked on your calendars the way, of course, the November election was marked here for domestic vol traders here in the U.S. So there's been a lot of headlines around that of late. That, of course, is gumming up the works and leading to a little vol. In fact, you look at the term structure out there right now, you see, a nice little bump out there around the February election part of the curve, which, again, not surprising. There's a huge question mark over who's going to lead pretty much the largest economy in the Eurozone after that date. So whenever you have that kind of a question mark, it's going to be reflected in the term structure. Could lead to some interesting vol spreading opportunities out there. So kind of been an interesting, this is usually the time of year where we are struggling to piece together any sort of activity to really talk about here in the vol markets. And instead, we have an abundance of riches, not just in VIX, but overseas as well. Mr. Rich, I know when you're not running classes over there at Hogwarts for derivatives traders, you cast a glance occasionally across the pond to see what's going on in the world of international volatility. Anything catching your eye out there these days?
Yeah, I do. I do take a look at Europe every once in a while, and then once a while, certainly on a monthly basis. But looking at it, yeah, I mean, you highlighted the German elections for sure, and it is very interesting to see Musk getting involved in kind of leaning on one party, in favor of one party there. That can he influence a second election? That is super interesting. But I think even before we get to that, I mean, you've got the new French prime minister saying they're going to try to form a government before Christmas, and then they're going to try to put in a budget before the end of the year. Like, there's still a lot of things that can go wrong in France just in the next few days. I mean, and typically, you're just trying to lock things in and close things down for the year at this point, and there's still a lot of potential catalysts that are going on there in relatively illiquid markets. Though the liquidity is definitely has been trending higher all in Europe all year long, which is really good to see and making it a lot more tradable. So that spread between VSTOXX and VIX, yeah, as you mentioned, like there's a lot going on why we saw the VIX moving. But to me, I would think that I wouldn't necessarily trade the spread, but it does suggest to me that the VSTOXX might not surprised to see the upside call buying, because it does seem to me like there could be a bid there. And you definitely got the bump in the term structure around the German election for sure. But we can't forget about the fact that there's still we still have a new U.S. administration talking about tariffs on Europe. A negotiating tactic most likely, but who's you negotiating with, right? They don't have a government in France and Germany right now, so not even clear who they would be negotiating with, even if they wanted to negotiate. Now, the one thing that I think that probably helps dampen European vol a little bit is that the ECB's got a much easier mandate than the Fed, because they only have a single mandate. They're only focused on inflation, and inflation has been falling. They don't have to worry about full employment. They don't have the dual mandate the Fed does. So I think that makes it a little bit easier because you've kind of taken the central banks out of play a little bit there. But at the same time, you see things like natural gas prices creeping up, and you're like, we know what that looked like a few years ago when natural gas prices went crazy and European inflation went crazy. So maybe even that's not as easy, as easy for the ECB as everyone kind of thinks, because they're kind of on autopilot right now in what the market's expecting, and as we know, or as we just saw this week, that perhaps autopilot isn't the right place. If there's an expectation of autopilot, maybe that's not a good expectation. And so I think there's a lot of opportunity, a lot more, like I said, a lot more liquidity, so a lot of chance to really trade these potential headlines that you're going to see.
Yeah, I neglected to mention the additional tariff threats now going to Europe. Trump's just throwing tariff threats. You get a tariff, and you get a tariff. Even our allies, you get a tariff too. Why not? So the tariffs across the board, it seems like. If you're intrigued by this stuff, listeners, but maybe VSTOXX doesn't float your boat for whatever reason, maybe you like a little bit more index options trading, I get it. There is a flavor out there you may be intrigued by, of course, VSTOXX 50. They've been really pushing the daily options out there. In fact, that's what Russell did the whole webinar about. I think he has the webinar coming up about this. But, obviously, daily 0-day options have been a growing story here in the U.S., but they're not exclusively isolated to here. They're a growing story overseas as well. So if you're intrigued by a little bit of intraday vol fun over there in the Eurozone, VSTOXX 50 daily options lighten up the tape just earlier this week, December 18th. So when the market was melting down, they set a new record, 100,000 contracts going up out there, 100,016 to be precise. That's a new record for them. Also, we've talked for a while about how 0-day is just dominating the domestic indices. 50% plus of volume in the SPX on any given day is going to be these 0-day contracts. A little bit different story overseas, which is kind of interesting to see. A little bit shy of 15%, 14.91%. And again, that was on the busiest day they've ever had. So obviously, usually it is much less than that. So kind of interesting, the ADV for them right now, around 36,000 contracts a day. So kind of interesting if you're looking to maybe wet your beak with a little bit of 0-day fun beyond our shores. There you go. VSTOXX 50 daily options might be calling your name. Meanwhile, let's see, is VIX calling your name right now, listeners? Are you hearkening to the siren song of VIX today? Well, it seems like some people are. It's a pretty active day. But then again, when you start hearing some of these other numbers I'm talking about today and this week, you might say, well, not that great. But today, 763 on the tape right now. So all things considered, that is actually a fair amount of volume, especially when you see that the ADV is only 730,000 contracts. That in and of itself is up 32,000 contracts from this time last week. So again, that seasonally quiet period, VIX should be going to sleep. Volume should be heading down the drain. And instead, Powell and company turning up the flame out there. Let's see how our top 10 metric has evolved since last we chatted, listeners. Again, I know a lot of you glued to the VIX top 10, the newest hot indicator in the world of vol, if I do say so myself. And right now we have back to, dare I say it, a more normal structure here. 8 calls, only 2 puts to be found. This time a week or two ago, it was completely the opposite. It was 8 puts and only 2 calls. So the pendulum has fully swung in the other direction, listeners. Let's see if we can find our 2 put friends here. Number 10, only cost you 161,000 contracts to break into the top 10 in VIX right now. That's pretty light, but then again, remember where we are in the seasonality, and of course, we just had VIX roll off the board on Wednesday, so that's going to take a lot of OI with it. So $1.61 in this environment is probably about what you'd expect. That gets us to the Jan 21s. Number 9, 175,000 of the Feb 42 half. So we're right back at it, listeners, at number 9. Number 8, 177,000 of the comparatively reasonable Jan 18s. Those were looking pretty good. Even still looking good right now, but looking pretty good, obviously, earlier this week. Number 7, again, right back to it, 183,000 of the June 42 halves. So you know what? If April 42 halves not cutting it for you, allow me to present the June. Obviously, this is part of those 1x3, 1x4 ratios that they've been doing a lot of, and they've been rolling them out month after month. Number 6, 212,000 of the Jan 22s. Number 5, here's our Huckleberry listeners, 216,000 of the Jan 15 puts. May have a few of those in my back pocket myself right now. Number 4, 238,000 of the Jan 17 puts, and then that's it. No more puts. If you came to the dance looking for puts, that's it. You can go home now. Number 3, 247,000 of the Jan 20s. Number 2, 276,000 of the Jan 30s. Remember, we had Gies puts dominating our tape last week. What is the big dog this week now that Gies has rolled off the board, listeners? It is 281,000. So actually kind of light for the top spot in VIX land of the Jan 50s, 5-0s. So kind of interesting positioning out there. I do believe that's the other half of a vertical out there. So I don't think folks are coming in and loading up specifically on the Jan 50s, but we can go dig in and find out. Let's look at today's paper first. What is lighting up the tape out there today, listeners? We've got 88,000 of the Jan 17 puts going up in pretty much big chunks. Big chunks out here. Looks like it's a 2017, it looks like here. So it might be a bit of a roll down here from the 20 to the C. Yeah, it looks like they're selling their 20 puts, so they probably loaded those up. We were talking about put 1x2s yesterday out here, listeners. I don't think it was these exact strikes. But either way, it looks like we have a bit of some put 1x2 action or put rolling action. 88,000 of the Jan 17 puts. Let's see. There's a lot of OI there too, so it's hard to tell. They're not closing, I don't think, but we'll have to go look in and see. Number 2, 48,000 of the Feb 15 puts. Those are definitely opening. Number 3, 47,000 of the Jan 18 puts. Number 4, 44,000 of the Jan 15 puts. And number 5, 40K of the Jan 20 puts. Not surprising. Vol kind of falling off a cliff today, so we're seeing all puts all the time out there. Yesterday, man, a banger day out there. 1.41 million. It's been a while since we've seen an M handle out there in VIX land from a volume perspective. And we got a few this week, listeners, including yesterday, the banger day of the week, which may surprise you given the vol we saw on Wednesday and all the action going on Wednesday. But Thursday actually taking the bull by the horns, taking the number 1 spot ever so slightly, 105,000 on the tape for number 1 of the Jan 15 puts, followed by number 2, 73,000 of the Jan 20s. Number 3, 71,000 of the Jan 18 puts. Number 4, 62,000 of the Jan 30s. And number 5, listeners, we have 54,000 of the Jan 16 puts out here. Listen, what were you up to out here in terms of all things VIX out here yesterday? Remember, we were talking a little bit yesterday. Yeah, it was yesterday. It was the 18-15 1x2 put spread we saw go up yesterday. So the 15 puts ended up going up 105,000 times. I don't think all of that was part of this 1x2. I know they did it a few times for 94 cents, buying 10,000, selling 20,000 of the 18 puts versus 2 of the 15 puts. And they kept doing it a few times. So I don't think they did all 105,000 of those, but there was a lot of the puts going up. Listeners, Jan 18-15 put 1x2. You like that, listeners? Buying that for 94 cents, opening on both. Kind of interesting. So we've been saying for a while, why don't we get a lot of size put 1x2s in VIX? There you go. There was your Huckleberry yesterday on a pretty active day. Wednesday, 1.35 million on the tape. The big dog, once again, Jan 15 puts. Man, who knew? Jan 15, the place to be. 117,000 of those. Number 2, 71,000 of the Jan 14 puts. Number 3, 52,000 of our old pal, Jan 42 halves. Number 4, 52,000 of the March 20s. And number 5 on the second busiest day of the week, 40,000 of the Jan 50s, 5-0s. Tuesday, also a million contracts. Usually on Tuesday, kind of sleepy. Everyone's waiting for the Fed on Wednesday. Not a lot going on, but not this Tuesday. Man, a banger. 1.22 million. The big dog, 124,000 of our old pal, the Gies 15 puts. Of course, you have the added little bit of drama of VIX going away, so that's going to add some volume, which is probably what accounts for hitting a million contracts plus on us. Otherwise, what should be a sleepy Tuesday. Number 2, big drop off between 1 and 2. Number 1, 124,000 of the Gies 15 puts. Number 2, 49,000 of the Jan 17 puts. So quite a drop off. Number 3, 48,000 of the Gies 16s. Number 4, 46,000 of the Jan 14 half puts. And number 5, 39,000 of the Feb 85s. Oh, we're back at it, listeners. I'll have to go dig and see what the other leg of that was, if there was anything. But my goodness, here we are, Feb 85s, listeners. Is it that time of year? Seems like February, for whatever reason, there is a lot of that kind of. February and April seem to be the time a lot of people like to go out and put on this, shall we say, optimistic upside, to be charitable. I need to go dig and see what the other leg is of that. Monday, the comparatively quiet 746,000 contracts on the tape. That makes some sense, obviously. We were heading into the Fed on Tuesday and Wednesday, and it is that time of year, listeners. 59,000 for number one of the Gies 13 puts, followed by 54,000 for number two of the Gies 14.5 puts. Number three, 51,000 of the Gies 20s. That was definitely closing. Number four, 30,000 of the Gies 14 puts. And rounding out the top five, getting a little bit of upside going, 27,000 of the March 35s. All right, man. That is a lot of talking. Let's go out to the Southern Vol Mecca, see if he has anything to match with that. Mr. Meatball, sir, what caught your eye in a flurry of VIX paper this week?
Yeah, so, interestingly, not a ton of, a lot of small paper today, or like medium-sized paper, no giant blocks. Biggest trade today, a buyer of 29,000 of the Jan 17 puts. Makes sense. It's a nice little vol fade. You've got the Feb 15s that are real active. So you got the Jan 17s and the Feb 15s really active. On Thursday, I'm pulling up my trades as we talk. On Thursday, again, another day worth a lot of like medium-sized trades, but nothing giant. Biggest trade of the day was a seller of the Jan 15 puts. They actually did the Jan 18, 15 1x2 for like 90 cents. Don't hate the trade, but it just, nothing, no massive trades, despite the giant move in volatility. Wednesday, which was VIX settlement, you think, hey, maybe we're going to get a ton of huge trades. No, we get one big huge trade, and it was a seller of the Jan 42 calls against a buyer of the Feb 25 calls. So kind of a weird diagonal spread, maybe a roll. And they did that 52,000 by 35,000. Again, no, I'm a little surprised that, no giant 100,000 lots around this or anything to that degree. On Tuesday, the biggest trade, somebody sold 30,000 of the Feb 85 calls at 20 cents. They probably weren't liking that on Thursday, but they're probably feeling a little better about it now. Oh, you know what? It was a 1x2. They bought the 50 85 call 1x2. I was
just going to say it was
for
a 1x2.
Nickel.
Yeah.
I don't know if you saw that, Mark.
I was just going to talk about, I just found the other leg of that. Yeah. It was the 50s for 45 cents against.
Did they unwind it?
It's definitely opening on the 85s. It might be, I don't know. You're going to roll the 50s to the 85s, 1x2s. That seems weird.
No, so. I think they bought the 50s, sold the 85s 1x2 as like a little hedge. Unless you think we're going to 110 and staying there by Feb, it's not terrible, but where is that currently trading after the move on that we've had over the last couple of days? Well, let's take a look. The 50s are 60 cents. The 85s are still 20. So he's made 20 cents on it. You can hey, take your unwind, dude.
Take your 20 cents and run.
Yeah, take your 20 cents and run, dude. And then last but not least, Monday, looking to see, I don't recall. Yeah, another day where nothing huge, just some closing of December options. Biggest like new trade, April 36 calls for 23,000 for $1.30. So lots of activity, but it was all like 5,000-10,000 lots. None of these giant 100,000 lots that we see.
Yeah, a lot of weird stuff. I don't really love. You're right. That 1x2 either way. I don't love selling one, buying two, 50, 85. That's weird. And then buying one, selling two. Do it for nickel credit. I guess I don't love it that way either. So yeah, if you get your 20 cents, get the hell out of Dodge and go find maybe a better trade. Mr. Rich, anything catching your eye in a hurricane of VIX options flow this week, sir?
I'll tell you, I hate that 50-85 1x2 on either side. on selling one, buying two makes 0 sense.
Yeah, I don't like that at all.
So they're buying one, selling two. But guess what? Even if the VIX spikes, good luck trading out of that. You're not going to get any sort of value in trading out of that. It's just, I think that 1x2 just makes no sense whatsoever. And then, I mean, I guess maybe if your risk manager is tapping you on the shoulder saying you need some tail protection or something, and that makes them go away. That's the only reason I could see it, because realistically as a trader, you can't trade out of that. So you're not going to really make much money on that. So I don't see the point. On the flip side, I love the put 1x2. It's probably a little expensive, but I think, you know, again, I'm trying to make the case maybe for a bit of a floor and volatility. And so I can kind of see where that, you know, an 1815 1x2, you know, there's a good chance that by Jan that's probably a pretty decent trade. I'm not worried, you know, too much below 15 to Jan. Well, you know, I say that now, and we're going into basically the next 2 weeks of holidays, and so maybe I'll be wrong, but I do that. I like that a lot more, and I know that's a trade that people tend to like. But those call 1x2s are just definitely not the way to do it. And I mean, to me, I've always you really want to kind of have it. You know, it's tough to put on those kind of call spreads out there as protection, because you really want to capture it when you get that spike, and it's so hard to do, I think.
I like that. The make the risk manager go away 1x2. I can certainly see that being a use case. Hey, let's go away. All right, here we go. I'll do this for a nickel. You happy? That is really the only reason to do something like that. There's no other practical reason. Because even if it does work out, you're not going to be able to practically trade out of that in any meaningful way. So yeah, that's hey, go away, leave me alone. Here's your 1x2. Are you happy? And the guy looks at his screen. Oh yeah, you're good. Okay, that's really the only reason to do something like that. And you're right. The 1x2 sounds good at put wise, except for you're right. It's a little rich. 94 cents. I thought that was a little high. I thought you could probably get more for the 15 puts. But hey, c'est la vie. Someone liked it, and it's probably working out all right for them right now at the end of the day. As we keep on rolling, is SVIX working out? You know, just to kind of show sometimes how capricious the vol gods can be, listeners. On this show a couple of weeks ago, we had our old pal, Dr. VIX, who's been talking about his SVIX saga for a while and how he's, you know, overwriting his levels out here, and he was short the 30s. He kept saying he wanted SVIX to close at $29.99 so he could keep his underlying and live to trade another day. Well, what happened? He kind of got his wish, even though the vol gods spited him, and they closed it at 30.02. It's like, oh, there you go. Dr. VIX got his SVIX called away. Boo-hoo for him. But that person decided not to exercise their option, so Dr. VIX thought he got another free roll of the dice. He kept his SVIX. And then lo and behold, what happens? I'm certain he wishes he got called away now. Just shows how 2 cents can change everything, listeners. SVIX 24.25 right now, down 5.25 points from where it was this time last week. That isn't the whole story, though. It got down to around 21.5 earlier this week. So it got just annihilated this week. So again, that 30.02 level looks a hell of a lot better in hindsight, obviously, now. We've been saying for a while, what the hell is it going to take to actually light a fire under SVIX from a volume perspective? It seems like Powell setting a match to the whole market was what it took, because now we're seeing some numbers that are reminiscent of what we saw a few months ago out here. 19,000 contracts on the tape out there in SVIX land. So, dare I say it, respectable volume out here again, listeners. It's certainly a hell of a lot more than their ADV, which is back up now. It dropped 1,300 a couple of weeks ago. It's back up 1,300 this week, back to 5,000. Right now, like we said, 19,000 on the tape. By the way, if you're wondering, the big dog out there today, 1,539 of the 24 puts expiring in the weeklies on January 3rd in SVIX. Looks like paper sold those for around $1.30. Ew. Interesting. All right. Maybe you use that to finance something else then. You're drawing a line in the sand at the 24 level in SVIX. Are you comfortable with that, listeners, given the fact that we kissed 21.5 this week? I don't know. Interesting stuff. Mr. Meatball, you've been riding the stormy seas now of SVIX for a few months here with your new product out here. What caught your eye out here in a very tumultuous week for SVIX?
Yeah, I mean, it took it on the chin when things started to kind of unravel. Hedge monetized that this morning, so the damage was not nearly as bad as it could have been. But I got to, like I said, we saw kind of a mini gamma bomb on Wednesday. Thursday, we kind of saw some continuation of fears, and then today, SVIX having a pretty nice recovery. Wouldn't be surprised to see vol get kind of the SVIX continue to recover into next week. One thing going nicely for SVIX is the fact that, you know, the VIX itself, the January options don't expire till January 22nd. So SVIX is still very, very heavy and almost entirely just Jan futures. So, you know, it's still going to basically respond like being long or short a Jan future, or well, short a Jan future, if you will. So it's still extremely responsive to kind of the overall market, the overall movements in Jan.
Yeah, it certainly is. Speaking of rich, some of those premiums out there in SVIX have been a little rich of late as well. If you're looking at dabbling on some of that, listeners, I know some of you have written in saying, "Oh, this stuff's kind of pricey." Yeah, some of that is reflective of the spreads out there as well, but that should be getting a little better now, spread-wise at least, with some more normal numbers coming back. 19, almost 20,000 content. Let's see right now. Have we hit 20,000 as of right now? 19,000 still, but you know, more respectable on the volume front. Let's go out to UVIX. UVIX was kind of all over the place as well. Again, if you listen to Options Oddities, we had some fun. We've been talking for a while about different ways to do Russell's quote-unquote secret UVIX trade for the weekend. He's not here, so I guess we'll talk about it for him. But yeah, and just loading up on the underlying going into the weekend, it seemed, I don't know, barbaric. We're not here just to buy and hold underlying here. We're here to do some options trading. So we were workshopping different ways. And in fact, we were talking about it with Dr. VIX on one of our pro Q&As not too long ago, different ways to do it. And we kind of hit upon, I think actually one of our listeners suggested on the pro side, kind of some 1x2 strategies out there. And we were kind of workshopping those. I mentioned before I was able to get one off for a credit a week or two ago. That was pretty fun. Then we kind of expanded it. We were talking about it again on Oddities last week. Of course, things were kind of widening out last week, so I didn't really have the opportunity to get it for a credit. And I was debating with our buddy, the options guy, Mr. Overby on Oddities. Should I pull the trigger, actually pay a penny for it? I was trying to at least get it done for even, you know, the old trader in me trying to say I didn't pay for this thing. But you know, at the end of the day, once I ticked a penny bid, bam, they filled me for days, listeners. And you know what? Having a little bit of upside vol in your back pocket heading into the Fed wasn't the worst thing. So kind of a fun way to play with it. Long story short, UVIX hit a high of 540 this week from about $3 and change not too long ago. So nice little pop for UVIX. I said maybe the BVIX, UVIX, of course. And volume-wise, UVIX coming roaring back to life today as well. 88,000 contracts on the tape out there in UVIX, so threatening 100K out there right now. The big dog out there right now, 4,800 of the 5 calls expiring today, which isn't that always the way. They always love playing fast and loose on options expiring today. There's been a lot of 0-day love on expiration day specifically in UVIX for a while. Obviously, the 5s got a bit of a ways to go. 4 halves, about 4,500 of those were opening. So I have been taking some off on the 5s, and about 4,000 of the 4s. That is obviously where the interesting action is right now. The 4s were trading. They traded as high as 65 cents, looks like, this morning. And now they got down to 20. It's traded a dime out there. With UVIX is now up to about 410. So it's up almost a point from where we were a week ago, about 0.95. Obviously, the high was much higher. And the ADV getting a little firmer again as well. 37,000 contracts a day, up about 4,000 from this time last week. Mr. Meatball, I think catching your eye in the sibling SVIX product known as UVIX, sir.
Yeah, it's getting kind of slammed today. Just shows you, we'll say it one more time, when vol pops, you have to monetize. And, you know, it's back down to, it looks like it might, you know, it's crossed back under $4 today. The volume is definitely there. You do have some people playing in it for next week on the option side. I keep waiting for this thing to reverse split so it becomes more fun to trade. But man, that implied volatility, 180%. You want to buy some calls? You want to buy the 5 calls for 205%, Mark?
No, I prefer to do my ratios when it's down around $3. That's a little more fun for me out there listening. If you want to hear more about all that fun, of course, stay tuned for Options Oddities, and a little bit after this show, we'll get into all that fun, how I ended up unwinding all that fun, which again, as Meatball was just pointing out, monetizing it is 90% of the game in the vol space. So you gotta know when to hold them and know when to take them off and live to fight another day and take your money and go home. VXX, Meatball's other favorite, 48.90 right now, up about 6.5 points from last week. It got up to a little bit north of 56 earlier this week, 56.14. So VXX still looking frothy out there. almost 49 right now. 57,000 contracts on the tape. The ADV is 29,000, up about 3,000. Mark, you said you were kind of dabbling in VXX again, mostly in downside puts. Has that been the case of late, or has this just been too wild of a time and you've been more focused on the SVIXs and VIXs and UVIXs of the world?
No, I've been dabbling here. It's the volume. The markets have started to tighten up a little bit. The volumes come back. It's $50, so it's got some real teeth. It can be a fun little stock to trade. I actually am going to probably add a little bit more here.
Uh-oh.
Thank you for reminding me.
A little nibble here for some VXX downside. And it's time for us to all nibble at the delicious ambrosia of the Vol God. Will we choke on it, listeners, or will we celebrate? I guess we'll find out. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the crystal ball. And man, I said before we were starting to see vol firm up during the show, and that appears to be the case. We're still up in all the major indices, around 1.5% across the board, but obviously coming back a little bit from those highs of around up nearly 1 3/4, 1 2/3% at the start of the show. And VIX itself is firming up a little bit as well. We're at about a 1931 coming into the end of the show, whereas we are at about, I think, an 1840 to kick off the show out there. So firming up nearly a full point out here, as maybe some folks, this lingering prospect of potentially a government shutdown over the weekend and maybe just some other general market uncertainty leading to a little bit more froth on top. Obviously a ways to go. Should be some interesting trading in UVIX towards the close out there today. Either way, 1931 for VIX, and we already said VSTOXX closed at 1684. So let's run through the list first. VSTOXX, the closest was Andrew last week at a 14 even. Russell, he and Russell were kissing cousins there. Russell was at 1399. We also had Gary Norton on the show last week. He was at a 1270. I was at a 13 double. No joy for any of us because we didn't have this VSTOXX pop in our crystal ball. Same deal for VIX, kind of across the board. The closest, and I put it in air quotes, was Andrew at 14.25. Obviously, over 5 points away from where we are right now. So no winner in a chicken dinner for any of us there. I was at a 13.28, so I was the next closest. Then we had Russell at 12.99, and Gary was at a 12.5. So no joy for any of us, which means, Rich, as our guest, you get the dubious honor of going first, sir. What are you feeling for this time next week in VIX? And if you're feeling daring, you could throw VSTOXX in there as well, sir.
That's a good question. I think we're gonna melt away a little bit here in the VIX, and I'm gonna go 17.16, and I will throw out a VSTOXX trying to stay consistent with my view. I think VSTOXX I think that spread's gonna collapse, and I think I'm gonna put 17.66 for the VSTOXX. I think we're gonna see that flip around again.
Wow, kind of right back.
I think the French budget's gonna fail, and we're gonna see a little pop.
Oh. Interesting there on the VIX and VSTOXX front. Mr. Meatball, your compatriot Andrew was the next closest, so you get the second dubious honor of going second. What are you thinking for VIX and or VSTOXX next week, sir?
All right. So where's VSTOXX right now?
It closed today at a 1684.
Okay. All right. I'll tell you, I think we clear things up. I think they get the budget deal signed. I think that they're going to take this holiday season, try and smash this stuff. I'm going to go 1441 for VIX.
Ooh.
And I like the VSTOXX flipping back over VIX. I'm going to go with a 1551.
I got to say, I don't hate what you're putting down there, sir. Talking a little bit of your book, but I'm okay with it. I'm okay with it in that sense because you're kind of talking mine too. But let's see. Let's go out here now, listeners, Is it going to be as much of a vol meltdown as the meatball predicts? Well, I don't think any of us would be mad at that, unless you're just all along the upside, in which case maybe you would be. But yeah, and that depends, obviously. Do we get this thing under grips? You know, we have a little bit extra wrinkle now of Musk and company throwing their weight around a little bit. So we'll see what happens out here. Past its prologue, they usually get it done. They'll probably get it done by... They don't go into the holidays with this thing hanging over their heads. Certainly, that would not look good for all these guys going back to their constituencies saying, hey, we got nothing out of DC, unless they really want to dig their heels in. So I think they probably will have this done by our show this time next week as well. Then what is our vol catalyst through the end of the year? Not much. You got to really look overseas for some of that stuff at that point. So I'm going to say, yeah, we're still firming up at about a 19 and a half right now. I'm going to say maybe not quite as optimistic as the meatball, even though I wouldn't mind that coming to pass. I'm going to say 1578 for VIX. And then the obvious question, does that VSTOXX premium persist? I'm going to say it does, but I'm not going to say it's as insane as we've seen in the past. I'm going to say 1656 for VSTOXX. So there you go, listeners. There's your markets. VIX this week, low, the meatball, 1441. The high, Mr. Rich, 1716. And me, as the tasty, delicious Goldilocks, 1578. Same deal for VSTOXX. The meatball at the low, 1551. I am once again in the middle, 1656. And Rich taking the lead at 1766. Seeing what we got. We got some 1680 coming in our chat. We got some other levels out there. So yeah, if you want to play along with the home game, listeners, hit us up today, the day the podcast goes live, if you're listening on demand. Questions at theoptionsinsider.com. Or, of course, hit us up on social media with your vol prediction. And if you get within a tenth of a point, you too can win fabulous prizes. Let's go around the horn now. Mr. Meatball, if folks want to talk SVIX or just general vol with you, where should they go? What should they do?
Yeah, you can come to optionpit.com and check out my VIX Edge blog and stuff like that, or just follow me on Twitter at OptionPit.
Got anything big going on for the holidays at Option Pit? Anything cool?
We're doing some special situations around this holiday season and this vol pop next week. Should be a lot of fun.
Ooh, special situations.
Make sure to check us out at optionpit.com.
Check them out, optionpit.com. Give them a follow while you're at it, at Option Pit over there. Maybe throw the Rock Lobster a follow as well. You might have a musing or two every now and then at Option Vol on the old Twitters. And Mr. Rich, if they want to keep abreast of all things Hogwarts for derivatives traders, where should they go? What should they do?
Well, you can follow me on Twitter at Excell Richard. That Substack, my Substack is called Stay Vigilant. And that, those are the two best places to find me. Or you go to the U of I website and then look up the Derivatives and Trading Academy. And if you want to kind of follow us there too.
Is the goal eventually to have maybe, tele classes that other folks can take who aren't at U of I, so they too, if they want to get a little bit of their wand work in at the Hogwarts, they can do it remotely, sir?
The goal is to start an executive education certificate around that, but still have a little bit of work to do on that.
Oh, that will be great. That'd be good. We don't have a lot of those in the world of options and derivatives, so the more the merrier. In the meantime, listeners, follow him on all of his various platforms at Excell Richard, all one word, EXCELL, on the old Twitter to learn more. Got some more coming in now. 1710 for Option God over here. 16.5. Oh, the Queen. She's usually pretty good. 15.5. I'm sorry, I misread that. 15.5. She's feeling a vol apocalypse. Some 1630s. All right, a lot of good markets out there, which makes the market, listeners. Get your predictions in. And if you want a place to express that vol prediction, public.com/VV. Again, literally the easiest landing page I've ever had to promote in nigh on 18 years on this network. Public.com/VV. The place to go to kick the tires and light the fires. Give them a thanks for supporting this network throughout the year on a variety of shows. You like these shows coming to you, Public's one of the folks to thank. Public.com/VV, easy place to do it. And of course, while you're supporting the folks who support this show, you know where to go. It's just urx.com/VSTOXX to learn more about all things VSTOXX. And of course, the EuroStoxx 50 daily options. Russell has that webinar coming up in early January. You're probably going to want to register for that. Pretty cool stuff. urx.com/VSTOXX to learn more. That's going to do it for us on the network for this week, at least on the on-demand side. But if you don't want your party to end, you want to come back for a little bit more fun, you want to talk, I don't know, UVIX ratios and all sorts of other wild trades, check out Options Oddities coming up a little bit after this show. Only place to get it, theoptionsinsider.com/pro. Trust me, it's a good one. It's a fun one, if I do say so myself. So we'll see you there in a little bit. Back again next Monday for the old OB. Then, of course, middle of the week, some holidays. I'm not a monster. Not many people come in for the Wednesday and Thursday shows. A nice little holiday hiatus for all of us. But we're back again on Friday to talk the week that was vol with a little bit of volatility views. We'll see you then. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. If you're paying $0 to trade options, you're paying too much. That's because at public.com, you can go a step further and earn rebates on every single contract traded. No commissions, no per contract fees. That's table stakes. When you place an options trade at public.com, you not only don't pay, you earn a rebate. And those rebates can add up fast. Public is the only options trading platform where you can earn rebates. You literally won't find a better deal. So, switch to Public and start getting rebates on every single contract traded. Or stay with your current options trading platform and leave money on the table. The choice is yours. Public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.